Shares of chip giant Broadcom, AVGO, are down $3.79, or 1.4%, at $255.50, after the company this morning pre-announced revenue and profit for the October-ending fiscal Q4 that is above analysts' expectations, and its CEO, Hock Tan, said the company intends to move its official incorporation to the United States from Singapore, a move trumpeted by the White House on the day the details of a congressional tax reform package were announced. Broadcom was an American company until it was bought in February of 2016 by Singapore's AVGO for $34.4 billion, with the combined entity maintaining its domicile status in Singapore. The immediate benefit of the domicile announcement is to make more likely regulatory approval in the U.S. of its proposed acquisition of storage technology vendor Brocade, BRCD, which has been held up since it was first proposed 1 year ago today, according to a note out just now from Amit Daryanani of RBC Capital. By being a U.S. company, Broadcom would be freed of the constraints of the CFIUS rules that limit foreign ownership of U.S. firms. Brocade shares are surging, up 86 cents, or 7.3%, at $12.60. Daryanani, who has a top pick rating on Broadcom, raises his price target to $300 from $285, writing that the announcement increases probability of BRCD deal close, which could $1.40 per share to annual earnings, and places some upside bias to tax rate. We estimate a move to 10% tax rate in line with ADI, QRVO, TES-WKS, etc. would imply $1 EPS headwind, fundamentally, takes away risk that AVGO can't do deals, and perhaps open up that upside catalyst for shareholders. Net-net, we think increasing the probability of BRCD close is a positive. The tax implications need to be flushed out, but will unlikely be onerous. AVGO remains well-positioned to sustain mid to high teens EPS and FCF growth, $20 plus EPS by FY19, and provide a material 30 to 50% dividend increase over the next 2 years. In a statement this afternoon, Broadcom said it intends to initiate a re-domiciliation process to change the parent company, adding that the change will occur whether or not there is corporate tax reform in the United States, although the final form and timing of the re-domiciliation will be affected by any corporate tax reform. Tan said that the tax reform bill would level the playing field for firms in the U.S. Zeke Miller with the Associated Press relates that President Donald Trump announced the news of the change from the White House. Earlier today, Broadcom pre-announced its revenue at the high end of its previously forecast range of $4.725 billion to $4.875 billion, which would be above the average estimate for $4.79 billion. Writing before the re-domicile announcement, Stacey Raskin of Bernstein, who has an outperform on the shares, asked why bother? It's not uncommon for AVGO to beat revenue by this amount, so why say anything in advance of a scheduled December 7 report date? Raskin had heard a bunch of theories from clients this morning, he writes, and he offered them up, even though we don't think any of them make much sense. The theories ranged from Apple, AAPL, a large customer, having a bad forecast when it reports this afternoon, so they're Broadcom getting in front of it, to competitor Qorvo, QRVO, having a weak outlook yesterday. At any rate, Raskin ended up concluding, assuming the lift is in wireless, we would watch the potential impact on FQ1. Recall the company indicated that Jan Q would hold up better than normal due to delays. So the question will be whether the increase is a pull forward or not, though this would likely be timing only. Also commenting today is Craig Ellis of B. Riley, who reiterates a buy rating and a $305 price target, writing that the pre-announce probably is a combination of wireless chips for mobile, storage controller chips for hard drives, and possibly also networking silicon. There was no segment attribution in the release, though in the past month Riley has noticed better than feared large customer storage demand strength, 10/23 STX beat plus raise augurs well for HDD chip supply chain and cloud-levered customers, and more recently multiple signs of smartphone demand strength. 11/1 QCOMC 18 smartphone growth forecast A+ for RF suppliers SWKS and AVGO, but QRVO4Q wobbles a risk to monitor. As such, and acknowledging we have not yet talked to MGMT, we believe it's reasonable to infer respective wireless segment, 28% of sales, and storage segment, 15% of sales. Upside could be the fuel, and if so, potentially contributing around $50.0 million plus and $25.0 million plus, respectively, on a first order of magnitude basis.